Hi friends, good afternoon. I have another stock update for you today. It's regarding Rajputana Biodiesel Limited. It has received an order worth 30 crores from IOCL, that is Indian Oil Corporation, and Hindustan Petroleum Corporation HPCL Limited. So the stock has run or jumped 8% after receiving this order. It's the share of the micro company specializing in the production and supply of high quality biodiesel from various raw materials such as used cooking oil, animal fat, vegetable oil, jumped 8% upon receiving a work order from IOCL and HPCL. The market capitalization is 161 crores, marked a high of 235 compared to its previous close of 217. Its subsidiary Nirvaanraj Energy Private Limited received letters of intent on April 16 to supply 3,543 kiloliters of biodiesel valued about approximately 30 crores from Indian Oil Corporation and Hindustan Petroleum Corporation Limited. This is a part of the larger tender issued by IOCL, HPCL, and BPCL for 200,000 kilos or 2 lakh kilo KL of biodiesel to be delivered between April and July 2025, and more orders for the remaining quantity are expected soon. About the company Rajputana Biodiesel. So, if you can see, if more orders are to come from these companies, then Rajputana Biodiesel stands to gain some more business in the coming months. So, I think we will need to keep a check on this stock, and I'm sure there would be further bull run if new orders are received for this company. So, keeping invested if you already invested is a good sign for now. And if you're looking to invest in this company at this point in time, I would suggest you consult a financial stockbroker to get the expert advice and see how this company would be performing in line with the other companies that may be possibly also competing for the same business. So, about the company, it's a biodiesel production company based in India, produces biodiesel from various raw materials. The company was established to promote renewable energy and reduce dependency on fossil fuels. Rajputana Biodiesel Limited, a state-of-the-art production process, involves the conversion of raw materials into biodiesel through chemical process called transitrification. So I'm sorry if I haven't pronounced that well. Products offered: primary products is biodiesel derived from non-edible vegetable oils, recycled fats, and methanol. The company also manufactures glycerin and fatty acids, which are byproducts of biodiesel production process. These byproducts have various industrial applications, including use in animal feed, energy production, pharmaceuticals, chemicals, textiles, and paper industry. The company's revenue rose by 68% from 26.5 crores to 44.53 crores in Q2 F4 25. Meanwhile, the net profit rose from 1.99 crores to 4.86 during the same period. Key insights: the company has a strong financial outlook with a price to earnings ratio of 32.58, which is lower than the industry average of 41.45, indicating reasonable valuation. It has delivered a healthy average of ROE 40% and RoCE of 18% over the last 3 years, and the promoter holding remains strong at about 65%. So we'll look through some details. You can see here 231 is the current price, up about 6.5% in the last trading day. Then again, 235 shows returns of 9.2% in the last 1 week. Then last 1 month, it shows a return of 10%. Last 6 months, sorry, last 1 year, it has a negative return of 10%. So there has been a correction based on the overall market. Stocks that were impacted with the correction in October last year. So hasn't fared well amongst the low performers. So it is not the best performing company. Valuation seems to be overvalued versus the market average, lagging behind the market in financial growth, so showing good signs of profitability and efficiency. Stock is not in the overbought zone, which is a good sign. The last 6 months, promoter holding has decreased by 24%, which is a huge factor, I believe. Low pledged promoter holding. So promoters haven't pledged any of their stocks, and this point is really insignificant. Mutual funds have no investments. Other institutions domestic 8.83, foreign institutional investments 3.4, retail investors 22%. So mutual funds 0. Domestic institutions reduced their stock holding by 1.17%. Then retail 22% of the shares, those which have been sold by the promoters have been bought by the public. So you can see here, possibly there may have been an IPO, which is the reason why you see this percentage being offered to the public. Here, the ownership strength is slightly missing the benchmark. The company is considerably attractive based on the value. So it's a good value, good buy position. Company knows very well the utilization of its assets. Company possesses stable growth and history, manageable debt, price to book value of 4.3, face value 1, cash of zero point zero 0.08 crores, which means 8 lakhs, then debt of 15.34 crores, then promoter holding of 65.71, earnings per share 6.57 in the last 12 months, ROE 52%, sales growth 129%. Then peer comparison, Varat Ventures, Modi Rubber, PE Analytics, Shri OSFM E-Mobile, then Subshri Biofuels, Third Rock Multimedia. What's really important here is that these companies range between 100 to 350 crores market cap. Then what important is the price to earnings ratio. So qual- quality tech labs very high price to earnings ratio. Subshri Biofuels also very high price to earnings ratio. Then AdTex seems to be good 17. Shri OSF Mobile E-Mobile 22. P Analytics 24, Modi Rubber 24 again. What is important to see is the range. So you can see here RoCE ranging from 10 to 35, and Shubh Shri Biofuels has the highest RoCE of 86. So something that should be looked into. Then we look at uh, graphic that is just for you to keep a track of. Company has shown good revenue growth in the last 3 years, 77%. Healthy ROE 51% over the last 3 years. Company has maintained healthy ROC 25% in the last 3 years. Company has a negative cash flow from operations of minus 6.77. Company has a low EBITDA margin of 0% in the last 5 years. So company is not making profit. So company, okay, has a high promoter holding that's covered, maintaining healthy. Okay, peg ratio of 0.24. Promoters, you can see Madhuri Swarna 9, Pallavi Soni 9.85, Sarthik Soni 20.31, Sudeep Soni 22.45, Tane Atar 4.08. So you can see IPO worth 24 crores in November last year. This is basically biodiesel engaged in manufacturing, supplying biofuels and their byproducts, including glycerin, fatty acids, and biodiesel. The production facility is located at G24 Rico Industrial Area, Rajasthan, spread over 4,000 square meters, 30 kiloliters per day. That is the capacity. Then fatty-free acids used, cooking oil and esters for value addition and waste reduction. So, uh, crude glycerin, biodiesel, fatty acids, RBD, palm, stream, Rajasthan, Uttar Pradesh, Gujarat, others 12%. Rajputana has acquired a 75% stake in Nirvaanraj Energy Private Limited, so mostly becomes a wholly owned subsidiary. 75% is a huge, uh, I mean, shareholding there. 24.7 crores raised through IPO, listed on December 3rd, 2024. The well, part of the funds used to loan expanding manufacturing facilities in the subsidiary, and high of 384, face value 10. Debtor days have increased, which is a concern. Some other peers to look at. Really, business range in a different field entirely, not a it's miscellaneous sector comparison. Then profit, operating profit, say from 2 crores to 2.5 crores, then to 4.86 crores. So the profit has grown, which is a good sign. However, the company would need to keep up the current, uh, what you can say, current performance and improve the profitability over the next 1 or 2 quarters. Then expenses, you can see overall year on year profit is also growing, so again a good positive overall. uh, Sales growth 128%, 12 months. Then profit growth 178% in the last 12 months. Stock price just listed recently, so no price to compare. Then return on equity last 1 year is 50%. So again, it would all depend on how the company performs the next 12 months, which would give an idea of the company's potential in this field. Then reserves 12 crores only. So again, something that can't really be looked into. Borrowings is about 20 crores. Uh, Debtor days have increased. Inventory days more or less the same. Working capital days have increased with the growth in the debtor days. So overall, the company would need to keep a track of its working capital, because in the last 2 years it has more than doubled. So something for the company to look into. So thanks for friends for watching. Please share this with your friends, family, and associates, anybody who would be interested with this information. At the same time, also would request you to share your valuable comments on as to how we can improve the content of the video, and any particular additional information you would like me to cover in the video. Thank you so much for watching. Have a wonderful weekend, and we'll catch up soon with another video. Thank you.